So what exactly are hidden moves and how can we take advantage of these moves? And I want you guys to bear in mind that when I'm talking about hidden moves, I mean they are related to high probability setups. And high probability setups are two-legged moves, second entries at the key entry points, because this is what the strategy is based on, and we're only looking for highest probability setups as possible. So we don't care about hidden moves. They're on the chart somewhere in a no man's land. We only care about the hidden moves. They are connected to otherwise high probability setups and under right circumstances. And there are two examples of hidden moves. I want to talk about those today. This is my first trade that I took today, and I shared it with my community. And just to get the idea why I took this trade, let's talk about and let's take a look at the structure, because market started with an uptrend looking like wipe, and we definitely started trending strongly. We are making higher highs, higher lows. This two-tier channel keeps working and looks valid. Prices are above the EMA and EMA is pointing higher. So I'm only interested in reasons to go long. I'm only interested in buying. There is no strong bearish momentum proven yet, and this is probably people taking profits, and EMA is still holding. So I'm only looking for reasons to go long. This is the new high the market made, and prices were continuing working lower. Now, when I'm looking for reasons to go long, I still need to pay respect to this downtrend correction, because there's a rule in price action: after break of a trend line, market will make a new low. So after this trend line broke and made a new low, that's when I'm safe to keep continuing looking for setups to go long. And now let's talk about the hidden move, because technically this right here is a first entry, because if you take a look at these bars, we didn't trigger higher above neither of these bars. We're working lower, first entry long right here. But if you take a closer look, doesn't this look like a two-legged move? This is the first leg, you're working sideways, and you have a second leg. It does look like a two-legged move to me. You have a break, new low. If you take a closer look, what is happening at the EMA? We're working sideways, and it is a bullish bar at the EMA, which means that people are attempting to go long here. I know we didn't trigger higher, so the entry didn't happen, but there are people trying to go higher. Had we checked the lower time frame, we would definitely see a first entry long right here and a second entry long right here, but we don't need to go in the lower time frame because we already have the perfect time frame for scalping. This is the 2000 tick chart, and which is very similar to 3-minute chart or 1-minute chart, depends on the volatility, so we don't have to go on a lower time frame. But this is how I use the hidden move. I treated it as a first entry long, pullback, second entry long right here. But once again, why did I treat it like this? I didn't just look at this and said, wow, I'm just going to bend the rules right here. I'm not going to count it as a first entry. No, all other factors are being met. All other factors of our strategy are being met, meaning we are in an uptrend. We just broke this spike in a channel, so we are waiting for a new high. We close above the EMA. This is a nice bullish bar, and we have a break and a new low. So this would be a second entry long under the correct circumstances. This would be a high probability setup. So this right here was just hidden move, and I used it to my advantage. Another hidden move was right here, and once again we only used it under the right circumstances. We are in an uptrend. We broke this major channel working higher, so you know what's going to happen. Yes, the traders are going to attempt to make a new high, and you keep working above the EMA. Take a look, you have a double bottom right here. First break of this bigger channel, double bottom. You're pushing higher, and you're pushing higher. First entry short right here. So this is technically just a first entry. But take a closer look. This definitely looks that there were people selling at the EMA, because after this bullish bar, there's a bearish bar right here and another bearish bar right here. So you can treat it as a first entry short, pullback, second entry short. EMA is holding prices, and this is looking like a reversal pattern. So this is once again a hidden move right here. Now, I don't want you guys to just take this concept and run with it and start looking for a bunch of sketchy trades. No, hidden moves are rare, and 95% of your trading, even more, are going to be nice, clear second entry, something like this at the key entry point. So should you be too confused and too worried about this? Absolutely not. But should you be aware of this and take advantage of this after years of experience? Definitely. So this is why I want to make a video about this, so you guys know that hidden moves are there, that you only use it as a supplement to otherwise high probability setup, because this right here would be first entry short, second entry short, if you just take a look how here the people started saying selling at the EMA. But once again, you don't have to worry about the hidden move so much, especially if you're new trader. Definitely worry about it. This is just for a little bit more advanced traders who, you know, understand the concepts and who can take advantage of the hidden moves safely. And if we want to find the high probability setups, we need to start with understanding the market structure as this printing on the chart. Today we wouldn't see this uptrend, of course. We would only see this small little piece of chart. And when you take a look at this chart and you don't really have the bigger channel, all you have to go through and all you have to follow are your short-term trend lines. So you would draw these short-term trend lines. You have a break and a new high, perfect price action. You're working lower, something like this. You have a break and a new low, perfect price action. You have a double bottom right here and market keeps working higher. We broke to the upside. Why? Because market traded into the trading range, so you are expecting breaks higher. Now, most breakouts will fail. We push higher, broke, and continue working lower. And by the way, I had my bars a little bit different than now when I was trading it live, but never mind. This is the double bottom right here, and prices are pushing through the EMA. First entry short, pullback, second entry short. Second entry is a high probability setup. Two-legged moves are high probability setups. You will see them all over the chart. They are high probability setups. Second entries are very reliable. Smart traders take advantage of these setups. It is tied down to human psychology. You don't really need to go into much details. It just works. So this is a second entry short, but we're not looking to reasons to sell because this is starting to look like an uptrend. We are pushing higher above the EMA. So this will be first entry short, second entry short, failure. That is what we are looking for. However, this bar, unfortunately, is way too big for proper risk to reward management ratio. So we just have to sit on our hands and let this go. There is a first entry long, pullback, second entry long right here. And I would mark this trade, but when I was watching this live, I thought this could be an overshoot because I had my channel like this and I wasn't really sure. I thought this could be an overshoot. I probably played it a little bit too cautious. So, you know, this is not a bad setup, but in my opinion, slightly aggressive. Once we made this spike and went into this channel, but you could find after these lows, you have to now realize that this is starting to be a very strong channel. I know it doesn't look like this, but trust me, it is a very strong channel. When you see it's very strong trend, when you see a lot of tiny little bullish bars, a lot of dojis, a lot of stims, they're just crawling their way higher. This is a strong trend. Don't get confused. These strong 90-degree moves higher and big bars, they will get rejected and reversed quickly. But this is the very strong and healthy trends. A lot of small bars, dojis, and just keep working higher, keep working higher. So what you have to realize is that during this trade, this type of trend, you will not get a lot of proper clean second entries. You will just probably be forced to take any pullback you can, and it's going to be first entry. So the first good setup that I saw was this breakout pullback pattern, because you broke this little bit of congestion, you pull back, and there are two key entry points working in conjunction. So this trend line and this support now. So you broke and pull back and keep working higher. Once again, you have a attempt to go higher and you can make a case for going long here. I'm going to mark it because this is one of those trends that you really have to, you know, be a little bit more aggressive. And I didn't know if he closed higher here. If he closed higher here, I mean, if he triggered higher here, then traded up lower and then triggered higher, this would be a second entry, but it didn't. So yeah, this market keeps working higher, keeps working higher. This was the first trade that I shared. And here's the thing, you have a new high right here, you have a first entry long, pullback, second entry long. And I want to talk about this because when you're watching trend and you don't want to go long at the very high of the move, you want to force yourself and keep buying the deep pullbacks. The deeper the better. You want to buy the corrections. That's where the weak traders get trapped and smart traders will jump on board. You know, remember, trends are designed to make counter trend entries looking very nice and juicy, and with trend pullbacks are, you know, a little bit sketchy. So this is how the trends are designed. This is why a lot of people are constantly looking for reversing patterns, because the trades look so juicy and the bars are looking so nicely. But don't fall for this trap. You have to buy the pullbacks when it's uncertain, because when you wait after the market has proven to you that it's resuming, it's already too late. So this is a second entry long, but you're going long at the very high of the day. So you have to be cautious of this. You have a new high right here, first entry long, pullback, second entry long at the EMA, first leg, pullback, second leg, this downtrend broke and made a new low. So it is safe to look for continuation of an uptrend, and prices are still working above the EMA. So you only are looking for a strong trend for reasons to go long. I already talked about this. This was the first break of this bigger pattern, so you're looking for prices to make a new high. And don't get too tricked by this short-term correction working lower. Just because we broke this channel and we're working lower, that's just temporary. This is a big trend up, and let the weak traders get trapped, and you just wait for nice first entry short, second entry short, hidden move right here. And it worked nicely. We already made a new high and we keep working higher. This week was fantastic. Hopefully you guys had a great trading week. We're heading into weekend, so enjoy the weekend. I'm gonna wrap it up soon because you probably don't want to hear me blabber here. So yeah, hopefully you guys had a great trading week. I'm excited. I'm looking forward already to the next week. Hopefully we're gonna get some nice volatility, but don't really worry about the hidden moves, but they're there and you can clearly take advantage of these if you're more advanced trader. And always look, just because it's not a perfect second entry, there's a two-legged move in those trades. There's a two-legged pullback hidden there. But once again, I don't take these trades often, very rarely, because most often than not you want to be looking for the proper technical second entries. They're going to be there 98% of the time. So but when I want you guys to know about this. So I'm going to wrap it up, and I'm going to see you guys in the next one. Take care, everybody.